All right, ladies and gentlemen, we are beginning the session, Digital Lending, What Next? Our panelists for this session are coming up on stage now. Allow me to welcome on stage Mr. Deepak Mendiratta, Chief Executive Officer, PayU Finance India. Can we please put our hands together and welcome our speakers up on stage? Next up is Mr. Atish Kumar Rout, General Manager, Punjab National Bank. Can we also welcome Mr. Sadaf Sayeed, CEO, Muthoot Microfin. Please allow me to welcome Ms. Pallavi Shrivastava, co-founder, Progcap. And this session is going to be moderated by Mr. Bhavin Patel, CEO and co-founder, LenDenClub. Now I will hand over the further proceedings of this session to our moderator. Over to you, Mr. Patel. Thank you.
Thank you, ma'am. Just a small correction. It is LenDen. It's a Hindi word. A lot of time it is considered as a LenDen. Just making a small correction. So thank you guys. But I see after such a great lunch, तालियां उतनी अच्छी बजी नहीं है हमारे सारे गेस्ट के लिए. तो प्लीज़ एक बार बहुत ही इंटरेस्टिंग सेशन हम लेके आए हैं. तो थोड़ा मोटिवेशन तो होना ही चाहिए. And today I have 4 panelists with me. अगर एक्सपीरियंस वाइज देखा जाए तो वी हैव डिकेड्स ऑफ एक्सपीरियंस. मेरे साथ सदाफ है और आतिश सर है, जिनकी ऑर्गेनाइजेशन कई डिकेड्स से चली आई हुई है, जो रिप्रेजेंट करते हैं पीएनबी एंड मुथूट ग्रुप को. और मेरे साथ पल्लवी एंड दीपक है, जो कि यंग एज फिनटेक को रिप्रेजेंट करते हैं. बोथ आर रनिंग देयर डिजिटल बिजनेसेस सिंस लास्ट 8+ years. So it's a very nice mix of panel. Somebody is into MSME lending, somebody is into microfinance, someone is trying to work with LSPs, which are new age companies, but their original DNA is of PSU, and they are trying hard to catch up with the technology, and I am sure in future they will be much larger than all of us together. Even today they are. And then we have Deepak, who represents international organization working in India and building big business, not just on merchant lending side, but also on a payment side and small ticket size personal loans. So I welcome all my panelists here, and we will just begin our discussion with one small question, that in today's world, what is driving your business? Is it a trust or a technology? Question is open to all 4 of you. And yes, audience, before coming here, I told them there are a lot of out of syllabus questions so that we can make it a little more interesting. So yes, please.
I mean, if I start with this point, actually, in my point of view, both go hand in hand, technology and trust. Technology definitely drives business nowadays, but technology alone will not drive until unless the customer trust is brought into that. So while this leveraging technology, I have to make it more safer, customer protected, then the customer will get onboarded. So both, in my view, has to go hand in hand.
So Deepak and Pallavi, do you also think so?
Hello. Yeah. So I think if you look at GTM, the go-to market, definitely, technology plays a role, and you got to reach out the customers and start using technology that allows you the speed, the scale, especially when we think about small ticket size lending. You cannot achieve the geographical spread and the depth and inclusion without technology. Having said that, what gives you staying power and a long-term longevity, and if you want to play the long game, there is no way that you can succeed till the time your customers trust you and are willing to partner with you and grow together with you. So definitely they go hand in hand. But if you ask me, trust is the foundation. If you don't have that, then technology is of no use. So for me, trust first and then technology.
What about you, Deepak?
So I think financial services में trust नहीं होता तो shoe नहीं होता. So
right.
I actually think it starts from there. So it starts from trust. I'm a fintech. Fintechs tend to be a lot of tech. So we do talk a lot of tech. But lately I think the balance has started coming in. So now we are seeing the fin and the tech balancing out. The customer is demanding trust. The customer is demanding transparency. The regulator is demanding transparency. it's starting to balance together. So baseline trust se shuru hota hai, and then with the evolution of technology,
so are
trust
you
is
are you
coming.
guys also saying that it started with trust? So customers are trusting you guys being a new age companies, technology driven companies, so you will be able to disburse it much faster, much easily, and then they start building trust with you?
Yeah, I think the base expectation is digital, seamless, great experiences, and then transparency, product transparency. That's where trust will kick in.
See, if I have to add to it, I think, the trust is more important when you are trusting an institution with your money, where you are depositing and, saving. But when it comes to credit, it's more demand driven because you're taking the money, right? So I believe, but, the way I look at our business, since we are into repeats cycles, we do revolving credit line business with supply chains. That's where there's a repeat buying and, repayment pattern. And their trust plays a much more vital role, because you may get the customers one time, but then if you want them repeatedly to come to you, I think trust is important, and it comes with actually transparency, effective grievance redressal mechanism, making sure that the terms of the engagement are transparently visible to the customers and explained, and RBI is doing a lot of work in that direction. So for me, I think it is a foundation layer. And in lending, I would say that it does not matter much in the beginning, but as you think about scale and depth, and you want to be in a large scale lending institution, trust is the way to go.
So last input, Sadaf.
Yeah, Bhavin. Trust, actually, it's not a binary, but basically technology gives you access to access certain customer, but if you want to build a meaningful relationship, then trust is the fundamental. And I represent Muthoot Microfin Group. It's a 138-year-old institution. The core fundamental value system of ours is building trust with our customer, and it comes with transparency. And of course, if you're dealing in today's world, then technology has to be there for customer to be able to kind of transparently see what they are transacting with us. So I think it's a combination of both, but I think if you want to build a meaningful relationship, and for a fintech industry also to kind of build a long-term profitable relationship, trust is fundamental, and that's where I think trust and transparency both are very, very key for a longevity and a meaningful relationship with any financial services organization.
So coming back to the same point, trust, are digital lending also helping, the digital lending view also helping us creating better organization, better governance model, and building more trust among the stakeholders as well? Because as you rightly said, it's 138 years old group. So I can imagine जब मतलब पेन और पेपर भी नहीं होते थे तब से ये business चल रहा है, right? And today it is completely into digital world. So kitna governance model, trust factor within the ecosystem has gone up because of technology?
No, digital plays a great role in building trust among the customer. I can give you an anecdotal example. We are into microfinance business where most of the dealings were earlier in cash. The entire disbursement was in cash, the collection was in cash, and the customer had to wait till the money is kind of deposited and a receipt is issued to the customer. But now with the use of technology, the cash is completely eliminated. The disbursement is directly into the customer's bank account. The repayments are also moving digitally. 35% of our repayments are entirely digital. Customer has an app in her hand. She can know at the moment she makes a payment, she knows that, okay, my money has been deposited in my loan account. So it creates a great amount of transparency. More importantly, it's an empowering tool. So the customer, when she has in her hand technology, with that technology, she can kind of reach out to us, request for an additional loan, register any complaint that she wants to register. She can see what her loan track record looks like, how much repayment she has to do, what is the outstanding, what are the other offers that are available. So that is the biggest, I think, advantage that it brings in. And it helps in kind of overall governance, because I think with technology, we deal with deep rural areas. So of course, we are dealing with customers which are transacting in vernacular local languages. And technology enables us to provide 12 different languages to deepest corner of the country, and customer at the same, like if he wants to, if there, we are in Tamil Nadu, the same app is available in Tamil. If we are in UP, it's available in Hindi. So that really helps create transparency and enable customers to freely transact and trust in our organization, and also be empowered to make our own decision.
So in a way, it's more transparency with the customer, with all the internal stakeholder as well as the regulator. And hence, I think the overall trust factor in the system itself going up. The reason we are talking and we have started with trust is a lot of time we read in the news that, okay, so many people's identity have been theft. And people immediately start thinking that digital is not good. But believe me, the people who have run businesses in non-digital era, they know theft would happen, and after few years person would come to know, अच्छा मेरे नाम पे ये कार्ड इशू हो गया, मेरे नाम पे ये लोन चला गया. थैंक्स टू डिजिटाइजेशन, अगर गलती से भी किसी और के नाम पे किसी ने लोन लिया हुआ है तो आपको 1 महीने में 2 महीने में पता चल जाएगा, बिकॉज द इकोसिस्टम इज connected with each other so much through technology, whether it is digital lender, whether it is bureau, whether it is your bank account, whether it is your NSCH or UPI mandates.
Yeah.
So I think that's what you are trying to say.
Yeah, absolutely. I think with digitization, what has happened is that overall governance has strengthened. I can give you an example like a credit bureau system. 10 years ago, a decade ago, maybe a little while longer, there was no credit bureau in the microfinance ecosystem. So each of the entity was operating in a silo. You didn't know that X entity has given a loan to the customer, and you are giving after that whether the repayment of that customer are good with that entity or not. You just go by the discussion. But today, almost 90% of the information from microfinance companies is coming on daily basis. So on a daily basis, I can know that whether the customer has taken a loan yesterday or not, or whether she has paid correctly the installment or not. So it really helps, and it helps building a healthy ecosystem, healthy kind of a credit environment, and also it encourages responsible lending. When you know the customer is over leveraged or she has borrowed too many loans, you don't want to lend. So today microfinance industry is dealing with the crisis of being over leveraged, the customer. So today we are able to cure that only because we know through the ecosystem, through the credit bureau system, that how many customers are having more than 4 loans or more than 3 loans. So which were at one point of time 20%, it has come down to 8%, only because we had that information. So digital has really, really helped in kind of ensuring that there is responsible lending.
So there is visible positive impact of digital lending in the bottom of the pyramid customer segment. Now let's move to the next biggest in India, which is SME. So Pallavi, how has been your experience? 8 years, I think it's a quite long time, and you redefined the segment you are catering. Earlier you started with LSP-RE relationship, now moved to majority of the business on your own book as a RE. How do you see that? And also, if you want to pass on some view to Atish sir where he can pick up, that if you have to work with a seasoned lender like PNB Bank, how is it possible to work?
Excellent question. So, yes, so we've been in this space and in a way category defining space for, as we look at it, because we fund the tier 2 supply chains of MSMEs. So a corporate selling to a distributor, distributor selling to a retailer. And traditionally, supply chain finance has been restricted to the tier 1 distributors and suppliers. We go one level down, and that's where the ball game is completely different, because now you're dealing with not one organized entity to unorganized entity. You have the relationship is now, and the data is shared now between 2 unorganized entities, right? And so that's where digitization and technology plays a huge role. Over the last 8 years, I would say what we have seen is this whole transition which we see with UPI, account aggregator, wherein now data to a large extent is democratized. So we've been able to solve for access problem. So it's no longer a challenge that I think anyone sitting here can look at the GST data. It's very beautifully available via APIs now with account aggregator frameworks. Your bank statements you can read and create a beautiful credit model. You may use AI, ML, there's a lot of work going on there. So access part is solved. However, artificial intelligence or technology cannot solve for the judgment on credit, right? So that's where the experience or your understanding or depth of data comes in. And we have understood that when we look at the SME segment, there it's more than access and saying, okay, now can I get credit? I think the question is more about trust, which you started with. Data and how do you actually reach to them, right? So that's from the supply side. As lenders, how do we reach MSMEs? I was really liking when you were using the word she constantly for a borrower. And I think, MFIs has done it beautifully for a massively underserved segment, which we didn't know how to cater to. MFIs have done that for underserved individuals. Corporate lending has been ubiquitous. I think we've been now talking about this missing middle, the MSME, SME segment, which needs a very different way of looking at how we can address that challenge. And that's where us, Progcap or maybe some of the other fintechs are trying to solve by saying how we can really look at different kinds of data. Let's look at ERP data that resides in the corporate supply chains, let's say, for example. So can we partner with a Unilever or a Samsung and try and see how we can address a large volume of retailers and sub-suppliers that they work with and create a data-driven model where we are integrated into those supply chains. And that's, for me, is real embedded credit, right? So far, when we talk about embedded credit, we talk about distribution, checkout financing. कि आपने वहाँ पे बस एक checkout का option दे दिया है कि ये embed हो गया. But then, to me, the real embedding of credit will happen when credit flows where commerce flows. And that's when intelligence comes into the system. And that's the work that we have taken upon ourselves. We are trying to do this. We have kept the portfolio quality healthy by constantly looking at this supply chains and ERP data and being plugged into it. And that's where technology is really helping us to monitor this well. So when we talk about moving from platform to partnerships with public sector banks, with private sector banks, the way they should look at us is that we are able to get this data, be their sourcing partners, and do this at a fraction of the cost, and while keeping portfolio quality, customer experience, and compliances in order. Wherein if they had to do this, they would have to build that overall expertise and put a large teams and have maybe people on the ground. So I think that's the directional shift that we have taken, moving from completely platform to now doing more of co-lending with public sector banks. We are already partnering with many of them and continue to look for more partnerships, and I think the way public sector banks are looking at us is a very strong ally to drive MSME financial inclusion in the country, and I think it's been a fantastic journey for us over the last 6
So just to
years.
give you some idea, Pallavi, you work on exactly opposite model what we are working. So we applied for NBFC license, which got rejected later on. And hence we decided that we will only remain platform business. And it's working good for us. And you followed exactly opposite.
Yeah.
That you decided to go on book lending, and I think it's working
and I think
beautifully for you guys.
that was why it was important, because we are onboarding a customer and that customer stays with us for 3 to 5 years, because we are funding their day-to-day working capital. So they will buy inventory, then they will repay, and then they'll limit. So it's like a credit card. So anytime the pipe stops, so imagine I'm working with a partner and they say, kal se band kar do, I won't do disbursals because let's say some regulation has come. Now, I don't know where to take these 5,000, 6,000 customers that I've onboarded with you. And so we've had those moments, and when digital lending guidelines came, now things are much more clearer. So we realized that, there is no way that we won't be partner in the journey. So either we will do on-book lending so we can continue the experience. So we have a lot of strings attached, and hence, the platform model is a tricky one for us.
So you touched upon regulation, but I am keeping it parked for the next session. Sir, coming back to you, that as we were discussing prior to this panel, that you are interested partnering with such kind of technology platforms or companies like us and make better reach for PNB. Now we know as a behemoth bank, you control so much of capital. So how do you think you want to create this reach across which products, so that we have so many LSP companies sitting in the audience and probably founders for startups tomorrow, how they can reach out to you or even see the dream of working with such a huge RE who will supply capital through their platforms?
Interesting question, Bhavin. Actually, I will take a clue from the first question about trust. We all agreed that it starts with trust. Banks, typically a public sector bank, holds a lot of trust from the customer. Basically, when we talk about bank or a financial institution, the trust comes first. So whenever customer, forget about technology. So everything, whatever we do in a bank, when we give out a cash to the bank, cashier inside a bank, the customer is least concerned. He is having that trust. Yes, when I go to the bank, even I hand over the cash to the cashier for getting it deposited, he's not that much worried, unlike if he need to give it somewhere else. So the public sector bank or any other bank or a financial institution having a legacy of 100 or more than that, this one holds a lot of trust amongst the customer. Again, with this trust, again, what the new generation demanded is that coming to the bank branches is quite challenging. They need not have to come to the bank. They wanted to do banking, remaining at their home or anywhere they are placed. So the technology came in place to facilitate those new generation customer. So technology came to facilitate the customer to reach out. But another, the objective of technology is to widen my customer base. So till now, yes, technology first came to give a seamless banking to the customer who are already into the formal channel. But later on, bank realized, can I use my technology to widen the customer base? Can I reach out to the customer who is very remotely placed? Can I bring them up? So there, through the help of business correspondent and lot many technologies, bank could able to bring many customer or who all are not banked or not into the formal credit into the ambit of the bank. But still there are large number of customers who are getting left out with. So here there is an opportunity for a fintech or you say LSPs or a partner who can bring me that value of reach beyond whatever reach I do have. Yes, so I will have that partner in place because typically the customers are banking or getting hooked to a platform where they are normally in a social media platform or maybe a e-commerce platform. So there, maybe typically a public sector bank is not there, wherein if I can partner with a fintech who can source those customers and funnel it to my to a bank where the customer has a trust, that will be a win-win situation. Plus, now what we see is that these fintech partner is not only sourcing the leads or forwarding or capturing the customer and forwarding the customer to do a assessment to lend. They are also having a deeper insight into the customer data. Now they can do a assessment based on that and they can funnel it only the customer who intend to be lent with from the public sector. So now a relationship or a partnership between a LSP or a fintech who can partially take over the responsibility of this one assessment or can only do a lead sourcing or this one sourcing a customer from an unbanked area to the bank. Both way, maybe banks like us, PNB will be happy to partner with. Because as a bank, if you say PNB, even we also understand that MSME plays a very very convincing role in growing of this economy. So I have to lend to the MSMEs beyond the way I have been doing it. See, as of now, I have been looking into the balance sheet, the bureau checks, all those things. Can I curate a product which is beyond all those things? Maybe some of the customers do not have that. Yes, in fact, we have also curated such kind of product which goes beyond bureau checks or maybe is this one GST return or balance sheet, all those kind of things. We can also working out if I can make an assessment based on noise, data drawn from account aggregator. Now I am also thinking like, can I do some kind of curated product which the small sabji bala or the footpath, this one, merchant who is on the street, can they be lent who do not have even those kind of information? Can I do some kind of assessment based on the UPI credits? Yes, banks like us, we are also working on that. But again, there, to widen that also, we are opening our door to partners, like what Pallavi was saying, that we can partner with LSPs and Fintech who can take over, not only drawing the customer onto their platform, also making a preliminary assessment, and of course, being a legacy of 100 more years of this bank will have some due diligence post that. And the recent guideline of the regulatory guidelines really touches upon this, to enhance the credit penetration through a collaboration. It has to be a collaboration and a structured and a very well-regulated collaboration, wherein the lenders like us, who has a very trust of the customer, has to be accountable for each and every if anything happens or the customer has an issue into that.
Right, sir. So on a side note, both the products which you are talking about, we do. So in case you want to do. Apart from this point, I think PNB is going to launch 3-4 different digital products, including agri loans, which is very scarce from a PSU bank, and they are looking for collaboration. So if we have anybody who is inspiring to do the collaboration, please look forward to that. So Deepak, coming to you, you have a different set of products also coming from a global company. So I have 2 questions for you, because none of us are into checkout financing, which you are into. And I think, as per my data, you are the largest player today at the checkout financing, I guess so. If not, please correct me as well. So how do you guys continue to underwrite that in such a manner that even though there were so many regulatory changes were there, but you could survive? And how do you see that as a future? Because in few of the countries like US, Indonesia, this product has survived and thrived like anything. They are one of the biggest consumer segment in terms of loan. But in India, we have seen majority of the player going down. So if you can share why it survived and how do you see future of that product?
So, checkout finance ke variants hai. It's not, the term checkout finance standalone will not tell you what it can do. What we started with was a very simple product. We started with a product that said, if you're at checkout, can we just help you ease your checkout process? That's a very simple buy now, pay later. You can pay it in 15 days. We keep a very high bar on that. How do we underwrite? We obviously look at your entire history on the platform. So the platform history will help us. You're on a food tech platform. How many times do you order? How many times do you browse? What are your typical ordering patterns? That helps us underwrite. We keep the philosophy simple. What we look at is the baseline ability to underpay and the starting point of discipline. So it's not a very high line product. It's not going to overexpose you. It's not going to overextend you. So it starts with a very simple, very basic deferred payment, very convenient at checkout. 15 to 30 days, you will repay it in full. And it's not a core credit trap product. It's a very simple deferred product. That's one flavor of checkout finance. The other flavor, which is where checkout finance really evolves, is the flavor of paying in EMIs. So you take a purchase and you convert it to EMIs. If you think about unsecured lending, that's actually the best way to do unsecured lending. क्योंकि आपको customer का need use पता है what are they using it for, right? And we can talk about digital lending, but you can go offline and you can look at the evolution of the industry. Consumer durable financing, वहीं पे, that's where the industry sort of turned around when you think of 15 years ago and how Bajaj turned around the industry. That's the opportunity in checkout finance. That's the true opportunity in embedding as well, right? I think Pallavi was saying, embedding is not just about saying कि एक option available है checkout पे. Embedding is about enhancing that customer experience, the shopping experience at checkout, giving them an option and saying you're playing in a product. Think of your offline experience. आप एक store में जाते हो, आप एक TV खरीदना शुरू करते हो. You realize there is financing. You go from buying a 40-inch TV to a 50-inch TV. Right? That's the power of truly embedding it in the journey. That's what we have to start seeing in the digital space as well. That's the power coming in the digital space. you think insurance, you think how penetrated health insurance is. So ability to buy health insurance, ability to buy life insurance, being able to convert that to EMI, education, being able to do professional courses, being able to then go and get advanced courses and advanced degrees as you convert to checkout. So there is very clear opportunities in the digital space where such embedding will I think we'll see more and more of it come through.
Right. So if somebody wants to really build a good business in this embedded checkout financing, what are the key things they should keep in mind which helped you succeed?
So first of all, I think it's a new mantra. Everybody's saying it, but I think what helped us for the longest time, lending should be accretive. So lending is not a game where you basically lend to get a lot of customers through the door. It should be at the baseline first level, well underwritten. It should be profitable. So that's the starting point. The responsibility of who you're lending to and how do you assess that lending need has to kick in. So that's the first thing that truly helped us turn this around. So if I'm assessing a customer, how do I assess their history? Ability to repay and how do I ensure the repayment comes back? So that's the primary, the first thing that you keep in mind as you get into this. That's something that has helped us a lot as we do this. Of course, we've digitized the flow. So we've gone online. So how clean is the user experience? How clean is the journey? Like I said, it's important to tell the customer at the point of decision making that checkout finance is an option available, not post fact. If you get there post fact, customer ko pata hai abhi meko kaise pay karna, right? So we all know if you're there and you're about to say pay, you've probably made up your mind. So that's the other thing there where you start succeeding, just being able to tell the customer well in advance that this option is available to them.
So that reminds me a responsible lending, and that's what the Reserve Bank of India had been telling all of us as RAs or LSPs to be cautious about, right? So coming to a regulatory angle, last few years RBI has been making it very clear. There were series of regulations which kept coming in, whether it is digital lending guidelines, FLDG related thing, co-lending, P2P regulations. It looks like clouds are now clear and the clear sky is visible. I feel so. Do you guys also feel so, or you have a different view about this, or some more things might come up, or some more clarification on the regulations may come up in next few months or years?
Yeah, I think RBI is extremely savvy and extremely responsible regulator. I can speak for our industry and as well as our parent company, which is Gold Finance. I think if you remember in 2012, something like similar what we are witnessing in gold was happening, and RBI came out with a regulation where they restricted LTV against the loan. At that point of time, all the NBFCs, banks were lending almost 95% LTV on a gold, but RBI came out and put a restriction of 65%. At that time, there was a hue and cry, but hindsight, that was the best decision because the gold prices crashed. And if at that point of time that LTV restriction would not have been there, there would have massive kind of a chaos in the market. So regulation has been good as far as Muthoot Microfin is concerned. In microfinance, there have been various initiatives that RBI has taken in terms of putting liberalizing the interest rate cap, ensuring that the lenders are free to kind of price the credit and ensure that there is flow of credit to last mile. Because most of the loans that we originate are priority sector lending. So there is a priority sector diktat to the banks to provide cash flow or to provide the loans. So that's why we get that funding. So regulator has created enabling kind of an environment. The onus is on the players to ensure that in the over enthusiasm of capturing the market, we do not kind of cross the line. In a sense, like somebody said to us during our IPO time, that governance is the borderline and good governance is much beyond it. So if you are a well-governed company, you are not trading at the borderline. You are trading much before the borderline, which governance is basically the regulation, the rules that have been. If you are going beyond it, you are breaking the rules. So if you are well within it, and that is where I think entities like young entities, fintechs, and new organization needs to kind of create a business model which is challenging the status quo, but not kind of breaking the rules, but at the same time being profitable. And that's what we have believed all the while. We keep the customer at the center. We keep that there should be viable business proposition for us, as well as we are solving a problem for a customer. It should not be something that benefits only us, doesn't benefit the customer. It should be something which solves a problem. And I think financial services has a big canvas to paint on. As an economy, we are still very under-penetrated. There are around 28 crore households, and credit in a manner that it should reach, it is not reaching. When we talk about financial inclusion, it is not only about one loan or a one bank account. It is about credit, it's about saving, it is about insurance, it is about financial literacy, and now more so digital literacy. And if we are able to provide all of these to our customers, then we can say that truly we are doing financial inclusion, and that is what we are working on. And RBI has created enough kind of infrastructure and platform for us to cater to that customer in a transparent manner, and balancing both viability of the business as well as client protection. So I think
the points which you said about governance and IPO. So Deepak, how do you see the governance being more stronger as and when more companies will go towards the IPO route? As and when they become listed, the governance model will be stronger, and probably regulator may feel a little more comfort dealing with those companies. How do you see that?
See, I think going public is a journey and a responsibility. You started the last question by saying last 3 years, a lot of regulatory changes have happened. Agar short-term lens thoda chhod dein, agar thoda long dekhe, at least as a digital player, the regulators actually allowed us to play. Right, so it started as a wider space, and they allowed us to play. And then as we figured life out, the regulator figured life out, and regulations came in, and FLDG guidelines came in, and digital lending changed, and the LSP construct came in. I think when you start talking about going public, I think it's a very positive change. Going public puts a bar on us as as a digital lender. As I think about my peers who are trailblazing, who are starting to think about going public, the growth mantra is now tempered by unit economics. Profitability is definitely baseline and key. Governance has become baseline and key. What it does is it sets the bar for all of us. It gives us the bar to say this is the level at which we have to perform. You go public, it generates trust in the market. You raise public money, public money is cheaper, allows you to do more business, more transparency, better, lower interest rates, if I may, which is something that obviously we've all been talking about as well. It's a virtuous cycle. So I think a virtuous cycle kicks in. I think globally, if you see, you were quoting some of the instances from the West. I think US went through this about 10 years ago. Companies like LenDenClub, etc., went public. I'm hoping we see a similar evolutionary play now. So I'm hoping that we see some trailblazers. We see public money coming into digital lending. I'm hoping that generates its own trust. It generates its own virtuous cycle, and I think it benefits all of us as an industry.
So when is PayU Finance looking for IPO? If it's in plan,
we will know it when we read it in the newspapers.
Okay, Pallavi, any comments on maybe going public will help you garner more trust or strengthen the governance model, or any plans around this?
See, you need capital to run the business, whether it is private money or public money. I would, and of course, that's a journey, right? And then the responsibilities multiply as you look at yourself as a public limited company versus private. So you got to have the readiness, not only in terms of unit economics and profitability, which are the key, but also in terms of your governance structures, right? You got to be feeling very strongly about how you're running the business. Your, basics are right. Your systems and processes are there. So once that is taken care of, that's when you can start to think about it. So we are some way, ahead from that thought process right now. But having said that, I think if I can take it from a customer's perspective, because the way we look at private capital and public money, and and then see how we are able to really grow and transform the economy and create the next wave of MSME lending and address this 25-30 lakh crore market. I just want to look at it because I know the time is ending, and just put it up for MSMEs. They don't have access to capital markets. They don't have access to credit guarantees, and I think that's an area where we need a lot of work to be done. So PayU, Muthoot, Punjab National Bank, Progcap, being NBFC, Fintech, public sector bank, we have, and payments company, we have a beautiful representation here and a P2P platform that LenDen runs. I think all of us are really working towards that, bridging that gap of MSME credit, this very vast 64 million enterprises, and I think we need all of that. We need public limited company, we need private companies, and I think it's just the space where there's so much impact to be created. And if there is one wish list that I can add, that so far we've been looking at microfinance as a category. We also have a categorization for housing finance. I think what we should work together more for as we think about our IPO journeys is also the fact that can we look at MSMEs finance as a category. I think that will be a real success, and that's when we can think about, the last wave was on UPI rails. Can we create digital credit guarantees, right, which allows us to be able to enhance and create that depth. We've been talking about MSMEs being second engine of growth in the budget. How can we really make credit available to them? And I think that's a broader question, whether public or private. And that's a mission we are taking up on ourselves and working towards along with all the other players. Very large market and lot to be done.
Right. Great. Thanks, Pallavi. Very beautifully summarizing. So I think we are almost running out of time. 2 minutes are there. So I will quickly conclude it. Still we have time. We will take 1 or 2 questions if at all possible. So we were discussing about digital lending, what's next. We have tried to portray a picture in front of you. I'll just connect all the dots now. That we had people coming from 4 different areas of the businesses, different asset segment, very vast experience, very small experience, but the smallest one is also 8 years, which is much longer in terms of Indian digital lending ecosystem. When we are talking about future of digital lending, I think all my fellow panelists feel that the regulations are already in place. Potentially in future things will open up. What basic ecosystem is required in terms of digital lending is already in place in India. The way some of the companies are hitting the IPO market, whether we talk about a few platform businesses like PhonePe, who are also doing a sizable lending. Paytm is already there. Company like Kist is already, they have filed for the IPO, and few more are lined up in coming years. That will strengthen the governance structure of these companies, and regulator will also trust these companies more, and slowly, gradually, together this ecosystem will be more and more stronger. At the same time, we in panel have somebody who controls such a huge capital like PSU Bank, PNB, and we have enthusiastic LSPs like us who are ready to deploy as much as capital possible. We believe together all these factors are giving a very positive signal for future of digital lending in India. If anybody has doubt, none of us have. But if anybody has a doubt that digital lending may have some problem in future, but we do not believe so. And in 5 years, we believe India can lead a way for a lot of global markets in terms of how the credit can use technology and build the trust and build the last mile delivery for their consumers. Thank you very much, audience, and my fellow panelists.
Thank you.
Thank you to our panel. May I request you all to please come ahead for a group photo? Ladies and gentlemen, can we please put our hands together for our incredible panel? It's been an enlightening experience engaging in conversation with all of you. We extend our heartfelt thanks to our esteemed speaker, moderator, and audience. It has been an honor to have you join us at the Global Fintech Fest 2025.